Live. This is Sam Evans with you for our second show of the TakeStock Live powered by stockability.com show. I hope you're all doing well and happy. Today's date is September 11th. Obviously a day that a lot of us are always going to remember for probably the wrong reasons. And man, even though it's such a long time ago now, I always feel it's important to just recognize obviously what the world went through at that particular time as well. So obviously our thoughts will always be there. Moving on now, obviously here, end of the week, myself and my esteemed colleague, Daniel Bustamante, are going to be with you for the next 45 minutes to an hour or so here live on Facebook at noon Eastern, talking a little bit about the market. So last week was our very first show. You know, we kind of free ran it a little bit as well, you know, talking a little bit about, you know, what makes about the markets and some of our picks and so on. Your comments coming in, people absolutely loved, and I'm going to be checking your comments as they come in throughout the day as well. A lot of you guys were loving actually, you know, what we were talking about. I had comments, questions coming in, and as the day actually, you know, goes through, and as we're like kind of going to be on this today, I'm going to make sure that I'm checking your questions, getting obviously any kind of comments that you have as the show goes on. So I've got multiple monitors here, keeping an eye on absolutely everything here that we're talking about. And so, you know, just literally kind of just looking for those comments as they come in. Today's show, what we wanted to do was we wanted to kind of talk a little bit about what makes a good investment. I mean, what a great question. What makes a good investment? I mean, a lot of people ask this, you know, and they've always said to me, you know, out of, you know, in today's market, with the market going higher, you know, what are the kind of things that we should be looking for? And it's a truly great question on here as well. We've seen quite a major sell-off in the markets over the last few weeks. It was about 15% or so, and then we've seen a push back to the upside, and now we're kind of floating around a little bit as well. A lot of kind of the media saying this is a great buying opportunity. And you know, a couple of days ago, I if you've not already subscribed to it, I sent out a newsletter. The company sent out a newsletter, the TakeStock newsletter, talking about specifically you know, the rising costs of the stock market and the true cost behind that. And this is definitely a subject that I would love to talk about as well. What I want to do is I want to talk about it on my own though. I want to bring in, like I say, my colleague Daniel Bustamante here as well. So Dan's just kind of joining us from Scotland. So Dan's going to be bringing up his video right now and coming here to talk look at this as well. And we want to hear a little bit about all of that too. I would love to talk about as well. What I want to do is I want to talk about it on. So Dan, are you there, Dan?
Hey, what's up?
Just waiting for Dan to come through on here.
Should be on. Can you hear me?
We know. Test. There he is.
Can you see me?
Absolutely. I've got you, Dan, on here. Absolutely. 100%. So how are you, Dan? How's things been treating you, my friend? I'm just waiting for your picture to come up on here. You look like you're in a dark room. That's the wonderful thing about like live, when everything's live. There he is.
I've got the video on. I'm not sure what's going on.
Absolutely, 100%. So how are you, Dan? How's things been? Okay, great. So yeah, still not seeing your video on there, my friend. If you want to just bring that up for me and try them out. Otherwise, we'll have to just do it like this. We've got your name flashing up. I guess you look like just there you go. I mean, I can hear you loud and clear, but just can't see you. There he is. Why do you want to hide that? There he is. So
what's going on?
Absolutely. So Dan, before we get into this, how's your week been so far? Let's just take a little look at the market, talk about obviously the market itself. And before we get into the subject of, you know, what makes a really good investment, how have you been finding the market this week working with your students, buddy?
I mean, this good week in the market, everything kind of rolled over the past couple of days. So, I mean, August wasn't that exciting. This has been pretty good. I got short Microsoft today. I got short Nicola Heavy, full scam CEO on the run. So I'm excited about that. S&P was good. It was a good week so far.
Absolutely. I just seen some comments on here. The guys are saying, bring Dan on. We want to see him. Bring him on camera. We're here. He's on right now as well. Okay, so good stuff. You know, I was seeing, the way we look at the market typically, Dan, we're not, we use, you have a kind of a slight part of fundamental analysis that you do, don't you? And then obviously there's the bigger chunk of the technical analysis to you. I think one of the biggest challenges, and this is why, you know, I see a lot of investors, you know, jumping in the market for fundamental reasons. I think being more of a price action investor and trader offers an advantage, particularly in markets like now as well, especially with, fundamentals being, so lagging. And, as we're looking for a good investment, I think, one of the things that comes to mind, Nicola, a big drop in Nicola today, 10%. I'm looking at this right now on my other screen to my right hand side. Nicola shares plunging more than 10%. Amid a dispute over short sellers fraud allegations. To me, that's fundamental, right? I mean, that is major news as well, but there's a lag in it too. How would, somebody like yourself, take fundamental information like that and deal with it, and how much that is going to affect your decisions moving forward? Does that mean you have a different opinion on Nicola right now? How's that going to affect it? Because I feel that a lot of people, use this information and it's so lagging, and it should be respected, but not just be relied upon as it's on its own as well.
Yeah, so I got to be careful talking about it because the CEO is like, he got a little excited with the short sellers that put that massive report out. So for those of you guys who don't know, like my background was in short selling, like pretty heavily, like in depth, like 2011 to 2013, like finding like fraud companies or companies with just like, malicious business models. So I hate to say it, but I like to see the markets when they out companies like this or the CEO, because I don't know, you just have investors that get fleeced all the time with these type of things, and it's good to see them outed. So how does it affect my decision process? Is it fundamental? Yeah. So I didn't really like the company when it came out on a fundamental basis because they've been around for a while. They didn't really produce anything. It was all kind of smoke and mirrors. And that's what I like about markets. It's kind of like a poker game where you can read the CEOs or read who's like talking about it. You can kind of sniff out like what's all smoke and mirrors and what's kind of like legit. So when it first came out, I wasn't too keen on it. And then I saw that piece come out yesterday and I was like, man, this is really, really good, like insanely good research. And they're going to have such a hard time refuting any of it. In fact, the CEO hasn't refuted anything. He's basically just got on Twitter. I was just looking right now. He's like, I'm not going to talk anymore. We sent it to the SEC. And he just wrote a tweet right now. He's like, yeah, he's in trouble. So this guy's it's over. So, yeah.
What about for the company itself though? I mean, like obviously maybe for him, but I mean, does it change your opinion? I mean, do you still see a good investment in this particular company?
No.
No.
So look, I think GM, I would hope that their board and people that advise on the deal to put money into that company were smart enough, but it's Wall Street and everybody always seems smarter than they are, in my opinion. So hopefully they saw some value in the company where they were going to oust the management. Because look, what could happen is they get rid of the management. The CEO's more than likely going to be gone, if I had to guess. He already cashed out shares, long ago. So
right.
I don't see an investment in it at all. I think there's better ways to put your money. I think there's an investment on the short side for sure. I got short this morning because I was busy trying to find shares to borrow. And I seriously, yes, IB and some firms didn't have shares. So I got short this pretty heavy like today. So
okay.
Okay.
Well, I mean, since the open on this, open market up at $35.84, now trading at $31.59 right now. So, that is on the short side. And for anybody who's like new to this, just kind of joined onto the radio show, when we talk about short selling, we're talking about the opportunity to potentially profit when a market goes down. Okay, you'll hear us use two forms of terminology: long and short. Okay, if you're long, obviously it's the classic way of buying low, attempting to sell higher. And then obviously if we're looking to short sell, we're looking more for profiting on the downside. It's the act of actually borrowing shares and then selling them to somebody else. It's one of the most beautiful things actually, I think, about the market that intrigued me years ago when I got into it is, you know what, you basically have a recession-proof environment, and one person's misery is another person's gain. And I think we can really see that right now as well. It's a bummer. It's a shame. I think, you've seen the meteoric rise. I feel for people though, Dan, again, who like jump in without any kind of risk management. I'm looking at the chart right now. I'm going to go and just bring this up while we're here. Maybe the guys actually be able to see this, and you'll be able to see it yourself as well. Let's just go on over to the chart. But right now you can see it. I mean, guys, this
is a thing of beauty. Look how nice that looks.
I mean, this is what always concerns me. What always concerns me more than anything else, whenever I'm looking at, markets like this, whenever I'm seeing any kind of movement, in a market like this, always concerns me the most is the speed at which these markets go up. The faster and faster a market goes up, the harder and harder it is to sustain that. It's like a sprinter, you know. And I mean, look, this meteoric rise we saw from, you know, let's say it really took off at $35, you know, to $93 a share. I feel for the people who were buying up here. I mean, let's face it, people bought up at that particular point. And this is why, you know, hearkening back to one of the subjects we're talking about today is, you know, what is the true cost of a rising stock market? Not only is protection key, and you know there was good money to be made. You know, this looks to me just like a classic pump and dump. You know, news has come out, markets pumped up, hit the 90s, everyone's thinking this is going 100 and the moon, and then bang, the big boys are coming and dump their stock. And you know, this last, I would say, relief rally we saw just a couple of days ago on 0908, you know, again, did it give us really kind of anything here? Did it really help anybody out too much on this? Absolutely not. Just another great opportunity for those short sellers to come in, you know, and push the market back to the downside. Wouldn't you agree on that, Dan?
So that pop a few days ago wasn't a shortcut. That was news on GM that they took a position. So it popped the stock from the 31 to 50. So
right.
that whole too far, too fast concept is just with anything. So it doesn't matter. It's like, look at Zoom, look at Chewy, look at like Shopify, look at NVIDIA. So when equities go too far, too fast, the downside is just when it like you lose steam, it just drops so quickly. So I talk about that, and I'm not trying to like pitch anything, but I do talk about that in the short selling course we have.
Yeah.
This concept of too far, too fast. And this is like regardless of this had like a fundamental issue in the business model, and it went too far, too fast. You kind of had two different things giving you a scenario to want to be short this. So I didn't short it the first time. I remember when this first went up. Remember when this happened, and we were on the show with Merlin.
Yes, I do remember this.
Remember that show
we actually
in July?
talked about this, didn't we? A couple of weeks ago.
And one of your students asked, they're like, hey, I bought put options on it. We were trying to explain to them that the implied volatility was through the roof on it. That it wouldn't matter. So what happened today is I followed this yesterday because I knew after reading the article it was in trouble. But I started looking at the call sides. A lot of people started coming and selling calls. There's even people picking up like $2.50 put options on this that are 2 years out. Like there's a lot of volume. So this is a good example. I mean, I literally just, it's a good example. So
it really is. And I mean, I just go back and going back over to the charts again, right, for just now and talking about, you know, this is one of the things I always look at. I mean, I'll zoom in and I'll just show the guys this, but you know, markets are like people, right? Wouldn't you agree? You know, you get this strong, I feel like I'm one of the NFL commentators right now doing all my drawing on the screen and the plays, but I mean, that's what this is. You know, it's about strategy, right? We see this huge push of the upside, but notice how vertical, like I like to see trends being a little bit more gentle, you know, just moving there. But you know, it's like that sprinter out the gate doing that 100-meter sprint. That level of ferocity is always a telltale sign that someone's pumping this, and those markets are unsustainable. And now what's interesting to me is the way that this has come down in such a controlled manner as well. You know, again, it makes me feel like we do have a little bit more, you know, on the downside. You know, we've got major selling activity appearing on this market where now people are committing and the supply is greater than the demand that we're seeing in this market, which to me screams, hey, you know what, this is, you know, not just, you know, this is people getting out of those long positions, and this is people adding to those short positions. And, you know, there's basically, you know, bigger market, bigger workforce just trying to get as much out of this stock as possible, you know, and it just goes to show, because in a lot of analysis you'll see, you know, typically you see a NASDAQ bounce back and all that, you know, there are going to be those stocks, those anomalies that are just not going to do what the general broad market does, right? And you're going to get these opportunities like this as well. You know, another one that springs to mind, I mean, and sometimes, you know, that news can be, you know, such an advantage in other ways. You know, when we look at it as well, let's go look at Kodak. Okay, on here, I forget what the code. What's the ticker symbol on that again, Dan? You know these things better than me on Kodak.
KODK. KODK.
There you go. I mean, look, another classic pump. I mean, look. Yep. So the administration says that they're going to start using Kodak, you know, facilities for actually helping like vaccine testing and so on. And then guess what? You know, the Robin Hood is jumping. What happened to that market right here? Now, literally another classic case. Market pushes. We get a stock that's basically done nothing. Okay, then with this huge push up to $60, and then obviously jumping in, and then bam, that controlled descent. And we see it again, you know, if I actually go back and look, notice how as the price has broken down, new sellers have entered the fray, and every time that market's trying to get back to the upside, off we go again. Again, you know, that's a pattern I like to look for. Now, I will say to anybody viewing the show and looking at it right now, I don't automatically say, oh, well, hey, you know, the market's going up, so sell it. I mean, that would be ludicrous, okay? That would be, you know, informative. That would be, you know, reckless, to be honest with you. you, right? But it just goes to show that no matter how strong a market you've got, you're always going to get these anomalies, if you like, right, Dan, to, you know, that you're going to have to start to see on here that aren't going to do what the market's going to do. And the overall strength of the S&P, the overall strength of the NASDAQ, not going to be enough to, you know, basically help you survive on just being long on a Kodak or a Nikola. So, you know, really, really important there. Just looking at some of the questions coming in, Clyde Jean's just saying, how do you find these trades? I mean, particularly, you know, looking for these kind of shorts, Dan. I mean, are you on the hunt for these kind of trades? You know, is it something you're sitting around for? Do you have like a criteria or something that, you know, you look for a little bit more, you know, when taking kind of like this into example? Because I mean, inherently more things are going up right now. So again, this isn't just a random thing of where you're just looking and saying,
Oh
hey,
no, I mean, I think
that's going to go down.
easy. I think it's, I mean, look, I hate saying it, but it's just, it's, as long as you're like paying attention to the market somewhat, it's not too hard to find them. I mean, it's just a matter of looking at charts. It's a simple answer. I mean, all you had to do is look at charts the past like 2 months, everything vertical. And I'm not like, look, I'm short Nikola, but I could be wrong on it. I don't think I am. I don't think Hindenburg research is wrong. I don't think
Right.
Citron research is wrong. Look, it's full scam. So I don't know. You just have to pay attention to the markets. That's the only way. There's no like secret sauce to it. It's just, you know, how do you, you know, how do you learn to play golf? You got to like get out on the green and practice. It's the same with markets.
Well,
so.
it is similar to golf in that respect. And I'm glad you've brought that up. Many people do think there's a secret sauce. You know, I've been in this education game for a very, very long time in this business. And, you know, I've seen it, you know, it's all about this one perfect strategy, or it's about, oh, you're not doing your stops the right way. Oh, you're not doing your trade management the right way. You know, there's a lot of these, you know, different things that I think people get very hung up on. They think that, you know, it's all down to one thing that's very, very specific on here. Right. But really at the end of the day, it's process over anything else. I mean, I've heard you mention many times, you know, it's about treating this like a business, right?
Yeah, for sure. So, I mean, I think like Nikola, Zoom, especially Nikola, I think you had to watch that when it came out. So I'm going to keep talking about this because it's hot right now, because I had a friend just text me, he's like, hey, I just sold my shares. And I literally just asked him, I go, why did you buy this? Right. And he goes, because it looked good. I like the trucks and then the revenue. And I go, what are you talking about revenue? There was no revenue. Like, so I want to be like blunt, because I told him, I was like, you like the trucks and their revenue. I was like, there was no revenue. So I was like, you're either lying to me, and I'm just not trying to be rude to him, but like, I know why he bought it. He just thought it was like popular and he bought the stock. So it goes back to like when people invest, like you're either going to get lucky in markets by just blindly buying, which I think is like 60-70% of what most people do. They just blindly blindly buy things, and they look 6 months later and it's up and they're like, hey, this worked. And they have no reason why it worked. And then I think there's people that put like the work into it to understand like how this stuff works. So that makes a difference. You know, like he said he still made $3,000 on it, but it's like, man, you know, you don't even know what you're getting into. You have to be careful with that stuff. And one of the things that I just want to like talk about is like, look, everything on Wall Street, look at like WeWork, or look at like Uber, these companies that have all this revenue, but it's just like, it's a sham. It's just like smoke and mirror companies. So all this stuff looks good on the surface, but you have to look under that to understand like what's going on. And that translates into like when markets go parabolic. The S&P was parabolic, Zoom was parabolic, Nvidia, Microsoft, all this stuff, like they just don't keep going up. It's too easy to get caught up in like, oh, markets are all-time highs. Like, look at the real economy and the stock market are two different things. So like, it's easy to get tied up in media, like, oh, look at markets at all-time high. You know, people get excited, but it's like, look, man, like you can keep buying into this hype, or you can just learn that there's ebb and flow. So we're gonna probably sell Monday, I think, too.
Yep.
So it's been a good week to trade. So I think next week will be good too.
Jim's actually just saying here, one of our viewers right now, do you think GM's going to be their white knight, Dan?
So I actually shorted GM too, along with that. So I'll explain why. So GM invested in Nikola, and I went to the options chain. There wasn't a lot of put out activity, so I sold calls on this thing. They probably will be if I had to guess. My guess is that they're going to they'll for sure oust, like the CEO's gone, like for sure. This guy like changed his lockup period to 180 days. If he gets fired, he gets $20 million from I read from Hindenburg report for 2 years or something. So they'll get ousted, and they'll put in like I'm just going to say it, they're going to put in a real CEO with somebody who actually has experience like running companies.
Right.
Not somebody like the guy has no background, and it's amazing he got to that point. No offense, but like, it's a huge company with a lot of investors. It's amazing that the board still allows that guy to run that company, especially with the way he's tweeting right now. So I
Yeah.
don't think they're going to be the white knight. I think they're going to try to save their investment for sure. And I wouldn't be surprised to see them roll it into the GM brand. So, but it's easy. It's look, everybody's trying to catch up right now to like the electric vehicle craze, right? Everybody's trying to Tesla beat everybody to the punch on it. Porsche is finally the Porsche came out with this Taycan, or it's actually a really legit, it's awesome car. But a lot of these companies are getting up to speed. I think people are trying to, or GM anyway, is trying to buy their way in. And I think maybe they made a mistake. Maybe they know what they're doing. Who knows? So they're much smarter than I am. So I would hope they know what they're doing.
I've always said in this world, though, of investing in trading and so on, I think the smarter you maybe think you are, the harder it gets, right? If you try to read between the lines too much with all of the news that's out there, it actually can become incredibly damaging, right? I mean, I know that from myself. I mean, in all the years I've been like involved in this, I've simply got to a point, Dan, where what can I say? I put my blinkers on. Right. And I don't want to look at the news. I don't want anybody else's opinion. I have to, trust the price. I mean, it's like today, I've been looking at the market, and I like, trading the Russell futures. It's my favorite market to trade. And, I'm buying the market today. I've I had an opportunity buying the market today, but I'm only going to be in it short term. The whole thing can change, by say Sunday night, right? Monday morning. You got to look at what the opportunity is right now. And, again, you're factoring those longer term, I think, fundamentals and news, into the longer term plays. And, you keep it more based on the price action in the shorter term play of it as well. But again, I've stressed this to people over the thing, the fundamentals are going to help you, of course, but it's also about understanding the price action too. I want to talk also about, our article that went out this week, Dan, and we wrote an article that we put out earlier this week called the True Cost of a Rising Market. And this is a subject, over many, many years I've spent time talking about with people and discussing and so on. And I'd like to again get your opinion on it, because, one of the things I'd love to cover here is, what is a good investment today? I mean, and this is something I say to all my students the first time they meet me. Like, they'll say about, what news do I follow? There's so much information, all that kind of stuff out there. But, let's put it into reality. Do we trust everything the media says, right? Do we trust everything politicians say? Do we trust everything that the news channels say? Do we trust everything that the corporations say? I mean, heck, we've just seen it with Nicola right now. Do we trust all this information? You can't trust the news necessarily. You can't trust the politicians. You can't trust the governors. You can't trust the media sources. You can't trust the companies. I mean, earnings historically, Dan, you'll know this. People put so much weight on earnings season, but earnings historically are one of the things, the greatest things, and one of the first things any major corporation will be happy to lie about. History has told us that over and over and over again, right? So I think, you have to understand that there has to be, a respect for the information out there, but you can't rely on just that alone. And I don't think that just that information that you read about is going to give you the true story. And sometimes the bigger story can be found by looking at the bigger picture, and back to those charts that we talked about, right, Dan? So again, I've always stressed that, I'm aware of.
It goes back to like, I mean, look.
It goes back to, sorry, you were saying.
Well, I mean, it goes back to like, I mean, it doesn't matter what the company does. I mean, if things just go too far, too fast, it's going to sell off. Or if it sells off too fast, it just doesn't matter. You've got like, I don't know. I think there's always this, like, you're asking like, what's a good investment? I think there's always this preconceived idea that you have to like buy a company and like find good investments. No, you don't. I mean, it just, why? Markets move up and down on a monthly basis and a quarterly basis enough where like you don't need to look out 6-7 years. I think that's such a farce. I think it's such of like, it's just a perpetuation from the financial advising industry, because they've got to like sell this story to clients that you've got to build a portfolio for 10, 15, 20 years. And I'd say that too if I was getting a 0.5% basis on the assets I brought in, right? So it's like you've got conflicts of interest that
completely
point people in those directions. So I don't look. There's probably not one company, honestly, and I mean this, aside from probably like Apple or Tesla, and I'm just gonna explain why I'd buy anything long term. Like the only reason I'd even consider when Apple sells off like lower, even Tesla lower, I'd even buy shares or like leap options on those things is because it's such a cult following, and they will go up. But there's probably nothing else in the marketplace, at least in my realm, that I focused on. And I'm sure there's a ton of stocks and equities out there that go up. It's not my specialty.
Right.
But there's nothing else I'm buying long term. I'd buy those two long term and hold them for like leap options, but I just have never looked at markets from that perspective. It's just too dangerous. So my personal opinion. So.
This is exactly what I wanted to get into, okay? Because I think you did hit the nail on the head there. And, you know, one of the things any of our viewers should know, like Dan and I, we don't agree on everything. We may be partners in everything that we do, like when it comes to our business and what, but, you know, we have our own opinions and that. But in this case, I do 100% agree with what you're saying. And, you know, I think there's a huge, right, Dan, wouldn't you agree? There's a massive conflict of interests from the financial advising world and the actual investing world itself. Like all I've heard over the years is buy and hold, buy and hold, buy and hold. Now, I'm not going to sit here in front of everybody and dispute that people who have been buy and hold investing haven't made money because they have. That's not in question. Yeah. The question here is who's really making the money though? Because, you know, if you're a mutual fund charging, you know, 1-2% a year fee, let's say you're you're a $2 billion fund, right? And, you know, you're literally taking, heck, let's just say, you know, you're a 500
quarter basis point,
fund, right? Yeah. You're making a quarter basis point. That fund in 1 year could lose half of its value and you're still making a percentage of what's left in the account while your investors and all your clients have lost half of their net worth, right? They always win. At the end of the day, they don't get paid on a performance fee. They get paid on it. And the more money that's in the fund, the greater their overall fee is. And I think that's what a lot of people don't understand. Why have you been conditioned to buy and hold? Because if your money's in the fund, they can charge you a fee. You know, at the end of the day, you got $1 million investment that you're paying 1% on. That's costing you 10 grand a year. If next year you lose half of your value, all right, guess what? You're only going to be paying a 5 grand fee, but you've lost half your money. They're still making 5 grand. Yeah. You've got 1 million customers doing that. Happy days. I'll be a freaking financial advisor all day long.
Yeah. They should put high watermarks in the mutual fund industry. It'd be interesting. So all, you know,
wouldn't it change the game completely?
For sure. I mean, look, in the private fund industry, if you're running your own book, if you're a hedge fund, whatever the entities we want to call it these days, you have high watermarks. So you've got to hit these high watermarks. I mean, they should have it. So I don't know. I think there's just too much.
Well, it's a competitive industry, isn't it? You know what I mean? They got their 80-20 split. You know, the funds, if they're not doing 40% a year, people are going to put their money. It's a very different game. But the mutual advice game, I mean, it's as rigged as it gets, in my honest opinion, mate. I mean, and we can say what we like on here. This is a safe environment, you know. It's a conflict of interest. You got to ask yourself the question, who's really making money? You know, at the end of the day. And that's what, and again, so like the buy and hold them, but people go, yeah, but in the long term I make money. All right, well, let's talk about that for a second, okay? So the rising cost, you're instructed buy and hold, buy and hold, buy and hold. Again, I'm not going to sit here, you know, and say that doesn't work. No one is saying that. Yeah. Who's it working most effectively for? Let's go over to a chart right now and bring this up, okay? So, you know, I'm going to go ahead and I'm going to screen share down on this, and I'm going to literally, you know, just pull up, you know, a chart on here for everyone to see, and, you know, we'll examine it, and maybe you can give me some feedback on this as we go. So I'm going into a slightly higher resolution right now because I want to go, I'm doing a full screen share. So let's all just take a look at this here together. I've got a chart here, the S&P 500, and this is actually the subject of my article that I literally put out this week. You know, you've got an article here. You've got a chart here, and look, no one is in question. We're looking at a monthly chart. Like, let's go back to 1965. Without doubt, this is a market that has moved considerably higher. I don't think anybody would question that. Great if you were buying back in 1965. Heck, great if you were actually buying in March of this year. But this is the little hidden cost, and this is what I wanted to specifically, you know, talk about on this room right now. Okay, you know, what are, you know, the true costs associated with the market? You know, I like to look at, you know, a couple of generations back. You know, I think one of the generations that definitely had it better than anybody was the baby boomers, right? I mean, literally, what a great, you know, generation there. So let's take the market back and let's take over like a great measurement would be to say, you know, before the last big dot-com bubble burst, you know, back in 2000, you know, we obviously had, you know, the dot-com bubble that burst right here as well. The market sold off pretty heavily with a push to the downside from here, okay? So no one's really disputing that fact on here. In fact, we can actually pour up my drawing tools and see. What I want to do is let's take 2000, just pre the dot-com bubble burst that we got here. And let's just take ourselves back about 20 years to 1980. I mean, now, I think you'd agree from 1980, Dan, to 2000, we had a pretty strong market. The sharpest off we saw was, the crash in 87 here as well, a few minor blips along the way, but a pretty steady move, a pretty steady kind of rise to the upside. Now, let's be specific about this for just a second, okay? Let's go and bring up our tools on here. And let's go back to, let's say 1980. And let's take this market to those highs of 2000, right? Just before that dot-com bubble burst. So let's just go and add some data onto this. And I want to measure this right now. And what I'd like to do is actually put a little bit of data onto this chart and some labels on here. So let's go and look at the percentage change on this market right now. Now, let's just bring this back so you can see. I'm going to zoom this in for everybody right now. From 1980 to 2000, let's just so you can see this. So from this measured move from here to here, all right, we had a 1,500% gain in the market over 20 years. Now, is that a case for saying that this stuff, all right, buying and holding works? Over a 20-year period, man, work your backside off in the 1980s through 80s and through the 90s, assuming you took a little bit of profit on that market, great. Even if you sat through the sell-off of the 2000, you're still up at these lows, 720%. I want to draw that again on the chart for everybody and everybody to see this, okay? Let's go back again. My number's in 1980 to 2000. And I want to just kind of take that off there. Mark that area off. And again, let's just go ahead and put that label on there. About 13, let's just call it 1,300%, right? Pretty clearly a decent move that we had on here as well, okay? So that's the first thing on here, right? Great comment, by the way. I'm just looking on here while I'm doing this. Nick just saying to me on here, great comment from Nick on the room right now. Thank you. 8% of mutual funds perform worse than the index, and 90% of funds are sold by professionals. Study, Nick. Thank you for sharing. It is, 80% of funds outperform the market. That's just one thing alone. But even if you're invested in the market, no one's going to dispute that a 1,350% return over 20 years is pretty strong. But let's say we weren't born 20 years ago, right? 40 years ago. We weren't alive. We weren't active in our careers. What I'd like to do right now is take the current market, and Dan, I think you'll find this interesting. You know what's coming. Let's look at the recent highs we had this summer and take it back 20 years ago. And let's make this color slightly different. I say it stands out. And now we've just done this again, okay? So now what I want to do, let's just turn these little studies off so you don't see those numbers, right? Let's just take a look on this. We had a 1,300% rally from 1980 to 2000. Let's say we started investing, just come out of college, started to put money away in our 401ks, IRAs, pension funds back in the UK, whatever it would be. We started investing 20 years ago. What does that return look like just buying and holding the market right now? That's what it looks like in 20 years. Tell me what that says. 130%. 130% gain in the last 20 years on the S&P 500 versus a 1,350% gain from 1980 to 2000. See, what are we learning here? I mean, at the end of the day, talk about unlucky if you were born in the young generational gap, right, Dan? I mean, at the end of the day, there's a very different result that we've got there. To reiterate, all the market's done since the highs of 2000 in the last 20 years is 130% move from 2000 to where we are today. The previous 20 years, 1,350%. I've always shown my students those simple facts and that simple data on there. And people are like, well, how is it? The market looks stronger. The market looks more powerful. It's making new highs. But here's the big problem. You go back, let's go back to 1980. You want to buy a share in the S&P 500 back then. If you want to buy the equivalent, you were paying the equivalent of $120 a share for the S&P 500 back in 1980. Today, you're paying $3,500 for the same share. What's happening to our buying power? This is the thing, and this is why I asked you the question, Dan, before. What is happening to our buying power? If you would have took $100,000 and put 100 grand, hey, why don't you put $10,000 in the market 40 years ago? Look at the gain you would have got. Putting $10,000 in the market 20 years ago, sure, you'd have made money, but would you have made the same money? I mean, completely not. It's a very, very much one-sided story. And, I've said to people, what kind of rate of return do you need? What kind of rate of return are you looking for? Because at the end of the day, if you're hoping to get the gains and to see, You mention this a lot in your classes, right, Dan? It's about having a goal, an actual goal. I'm not being funny, but, you know, if somebody today is hoping to get anything that they got, like, you know, baby boomers right now looking and saying, why am I not getting the return I got in 1980? It's because you're paying such a higher price for the market. And what confuses people is as the price of a stock goes up, it becomes more expensive. And because it becomes more expensive, it requires more capital. And because it requires more capital, you have to take on more risk. And the thing is this, if you take a stock at $10 and the thing moves to $20, you've doubled your money. But right now, to double your money in the S&P 500, because let's face it, Dan, you probably heard this. All the advisors will tell you, won't they tell you the same thing? They'll say, safest money to put your money is in the broad market. Well, go put your money in the broad market right now. You're going to pay $3,300 a share. The only way you're going to double your money buying and holding is if that thing goes to 6,600. And let's be honest, Dan, do you see the S&P 500 going to 6,600 points anytime soon?
Nope, not a chance. No, not.
It's a completely different ball game. It's a completely different dynamic, you know. And
it has to change.
It has to change. I say to people right now, if you want to be able to, you know, get anything close to 1,000% return on your money, all right, well, this is going to be ugly and you're not going to like what I'm going to say. This market needs to be selling off to down here. This market needs to be getting lower, and then you're buying and holding. And guess what? I don't care what kind of investor or trader you are. Market comes back to 1,000, market comes back to 500. I'm all over it. That is the time to buy and sell.
Yeah, but also forget too.
But it's not doing that right now, right, Dan?
Yeah, but you don't have to wait for it to sell off to buy too. I mean, you could short it. So I think people forget that too. There's like we're getting back into a conversation of like we want to buy things when they sell off, and that's like always the narrative that gets discussed. It's like the market could sell off as long as it wants, but there's all this money. I mean, I'm looking at Microsoft. I'm short that. I mean, there's a ton of money to be made on the downside too. And I think people have to understand that it's not like this whole idea that you have to buy companies that go higher to make money in the markets it's dated. It's a dated strategy. You can make money both ways, and you've got to be able in today's day and age. I'm just looking at, because the screen's just so far away, I'm looking at Nicola, but you've got to be able to short markets too, or bet against markets. And there's enough products out there for people to make money. I think most of the people understand that. Hopefully they do. So.
Absolutely. I mean, look, there's a ton of downside opportunity here as well. And don't get me wrong. I mean, what could be the advantages of buying a market, you know, for the long term when it comes down? One of the great things is, you know, dividend, right? I mean, I get people who come to me and go, what about dividend investing? Well, good luck dividend investing when you've got to buy Apple at the price right now.
For sure. Yeah. What difference does it make? Yeah.
The only dividend investors you're going to meet are your great-grandmother and your great-grandfather who were buying Coca-Cola shares like 50 years ago, 60 years ago. And the shares were so damn cheap that you had so many of them in your portfolio, you get a dividend. But what is a new investor today going to do? They can't go to the market and get that price. To get any real payout, you need more company stock. But you can't buy enough of the stock because the stock's so damn expensive right now, right? And people cannot see that. It's not an effective use of your capital. Dan, what would you let's just pull up one more stock, you know, on here as well while we're looking at all this info, you know, because again, this is common for you, it's pretty common for me. But you know, you mentioned Apple. Like, I'm not saying Apple, great company, love their products, love what they do, without a doubt, wonderful, right? But again, you know, you can say, well, even with the stock split right now, do we have a nice little buying opportunity here on Apple? We've had a decent little pullback. Yeah, I mean, I guess a lot of people got hammered on that stock split, right? A couple of weeks ago. Look, market already sold off from 140 back down to 110. I like the $100 mark. I like the $97 mark. I think the thing is, am I still going to go and buy Apple at $100 a share? The answer is no. I'm going to use an alternative way of doing it. Dan, you mentioned options. How can options help us in a situation like that?
I mean, on the long side or short side?
On the long side, let's say I did want to invest in a company and I want to profit from the upside. I'm not going to get the dividend yield, but are there more effective ways that I could take my capital? Like, I'm not being funny, but somebody with, you know, $10,000 isn't going to be able to buy that many shares of Apple.
Look,
so what's a better way of doing it?
You're just better off buying like leap options or in the money, like deep in the money options that are like 6, 9, 10, 15 months out. Because you don't have to watch the stock. It just makes it such a so a lot of people, like, I get it. Like, most people don't want to actively trade and they just want to buy things and not look at their portfolio, which I get, because it's like doing this is not at the forefront of everybody's priority. Like, it is for you and I. So people that have, you know, lives outside of this and want to enjoy life, that's just the more direct strategy, in my opinion, to buy in the money options or leap options. And not, again, I'm not going to buy, if it gets to like 190, I'm probably going to put long positions on this. But it goes back to market timing too. So you can't just go out and blindly buy things Like I think today, and I had a friend buy Tesla on Monday. He's like, "Oh, it's sell off." He was so quick to like trigger finger the trade to get long on this thing, and everybody sees it's like a sell off. Like, because we've been taught the past like 3 months, markets are only going up, right? But
Right.
it's not true. Like we're gonna keep pulling back on this. We have to pull back. So the good thing about options and leaps, like dated options. So like I have put options on Nikola for like January 2022. I literally have like 2 years to be wrong on this trade. As I put on this morning, I can be wrong for the next like 9-10 months, and I don't care. It doesn't make a difference to me. So if
Right.
that's like your flavor, then that's what I would do. So if you don't want to watch it every day. So
Absolutely. Absolutely. I mean, and on that subject, yeah, I'll just show this over. Like we were doing a trade session with the room this morning, and it was interesting. We were trying to get a nice buy on, and being flexible. It might be the case that, you do some short-term plays, in the interim while you're waiting for those long-term plays as well. Just going over back to the charts today, we were looking in our trade room this morning, and, the Dow Jones, this is the Dow Jones futures that we're looking at right now, missed a great long opportunity on it. It just didn't come down to our entry point, but we had a nice little area here where we're looking for the short side, and it's breaking down quite nicely as we speak right now. A good opportunity to make a little bit of money. And how much money was on that we were looking at today? I mean, we had a move from 27,600, and it's down to 27,500. That's about 150 point move on the Dow Jones that we've had just in the latter part of the day as well. So being able to, I think, to answer the question of what is a good investment, I think it comes down to, starting to be more dynamic in your thinking, more dynamic in your portfolio, more dynamic in what you're trying to achieve as well. And there's always, I think, a better place, to put your money. I mean, one of the things that I've stressed a lot, to students myself is, don't get too attached to one way of doing things. Don't get too attached to, hey, this is the only way. That's not the smart way to do it, I don't feel. There are many ways to slice the bread, as Dan has said many times to me when we've been chatting. There's many ways to skin the cat, another way you look at it, right? The simple fact of the matter is, there's opportunity out there everywhere. Our goal is to just, find where, the smartest ways to put our money. And I know you said, Dan, a lot of people, investors, they don't want to spend the time doing it. And that's fine. That's everybody's right. That's everybody's prerogative. But I then say, don't complain about the results that you're getting if you're not willing to put a little bit of time in to make the best of the results, right? It's not as simple as just, do something, let it all happen in the background. It does take a little bit of eyeballing. It does take a little bit of work. Now, does it have to take a lot? Could it be an hour a month? Could it be a couple of hours a quarter? Absolutely. But, I think that, things do need to be monitored. Things do need to be managed. And, we have to be smart about that, right? And, I think that, the more that if you're willing to put the time and the effort in and maybe just try and think a little bit differently to most, you're going to get maybe different results to most. My mum said to me, she said, son, if you do what everybody else does, you'll get what everybody else gets. And most people don't like what they get. And that resonated with me all my life. I was like, yeah, what do most investors do? They just buy, they hold, and they hope. And they don't see the true costs that are associated with that one particular strategy. So adapting is a major thing. Just coming towards the end of our show, Dan, we did a little feature last week, Your Call, My Put. We were looked at markets that we thought were going up, markets that we thought we were going down as well. I'm still, now we can stick with the same thing, by the way, but I'd love to do this again. I am a gentleman. I do like to give my co-host the first call on this one. Are you on, your call is obviously whether you want to look for something on the upside. Your put is something on the downside. What do you want this week, Dan? What have you got your eye on this week?
oh,
Downside.
let's go downside only. Let's say Nikola to 18 a share.
Oh, I would have pulled this chart back up again.
You'd love to see it at 2, but I'll take 18.
You are 18, huh? All right, let's just pull this up again so we can see it. All right, let's take a look again. So
that's where it's headed.
Man,
that's where it's headed.
It's going 18, you're saying,
Full scam.
Full scam. I'm going to just take a look at this as the chart. I mean, it's a bold statement, dude. I mean, I will say
you should read that report. I read all of it, and I read more late last night. I mean, I can't believe, honestly. And there was a Bloomberg article on earlier, like a while ago, that kind of called them out on it.
Yeah.
I can't believe some of the details that came out in this, and nobody figured it out. Either they figured it out, and nobody said it. It's like Theranos. So remember Elizabeth Holman Theranos. So people were like calling her out, and nobody believed it.
Right.
Until it was too late. I'm telling you, look at what's it at now? What are we trading? 31?
31.70. 31.70 right now. There you go. Real-time prices. There we go. As we are trading at the moment. I'm
So,
not saying, I mean, listen,
but
I'm just saying, I think there's going to be a little bit of like hopeful buying coming on around this $29, $30 mark. But Dan, I got to say, there's a lot of wide open space down there and taking us all the, I mean, I think $20 eyeball to be on the safe side is good. I wouldn't be surprised to see a little bit of a bounce on this, you know, a little kind of hopeful bounce and then more on the downside. But yeah, I mean, yeah, if that's the call on it, man, we will stick to it. Your call, my put. So that is Dan's
what
put.
about you?
Well, last week I was dollar, wasn't I? So last week, actually, I was bullish on the dollar as of last week. I was having a conversation with a good buddy of mine literally a couple of days ago who thinks that the dollar's done and dusted. I'm not so sure. I still think it's the prettiest girl in an ugly girl contest, which an old mentor of mine used to say, which I think is a completely bad saying. You know, I think a diamond in the rough, okay, is a much better way of putting that, okay? Because I like to be politically correct, but I do say, John, you can't say that. That's not the thing, but it is. It's the best of a bad choice, right? I mean, that's really what it is, the dollar right now. I still think we got a lot of selling pressure around the 94 mark. I expect, you know, but I still see a test of about 95 on this. I remain bullish on it, but I picked that one last week. So, you know, I guess I have to kind of look at something else as well. You know, this morning we were, you know, what's frustrating me a lot, gold at the moment is frustrating me a little bit at the moment, I will say. You know, I've been eyeballing gold, but I'm still not seeing a lot on it that's really, really, really standing out to me. But again, I still feel like there's some potential upside in the markets. I mean, I got to say on here, just going over and taking a look at some of the charts I've seen. Overall, yeah, let's take the Nicolas out of the mix. Let's take some of those guys out of the mix. I'm going to say Apple, man. I'm going to say we were looking at it. I'm getting ready. I think there's going to be a nice little bounce on that. I mean, if I had to, you know, I'm going to be real conservative around this, but around this 106 to 100 mark, I think $100 is screaming. I wouldn't be surprised to see a bit of front running, you know, in this market. I'm going to be a little bit more conservative around here, but this area, this 106 to 100, it's quite 106 to 100. It's a wide range. Another reason why call options might be the way to go on this. So I can give myself a little bit more room, if you like, you know, on the upside of this. But I wouldn't be surprised to see a little bit of a bounce on Apple at that particular area there. So that would be my one. And I think, you know, if psychologically, if that $100 area doesn't hold on Apple, you know, we probably see a little bit more. But I can't write that one off yet quite, Dan. I just can't. I really can't. You know, I think that, you know,
I think 100 is a good area.
I do. It's an obvious area, but sometimes the obvious stuff is the best stuff. So that would be my call, and Dan's put would be on Nicola, and we'll check out those when we come back next week as well. So I'm taking a little bit of a vacation, so Dan, you're going to be holding the fort down on what we do as well. This has been a fun show on here as well. Now, Dan, you have an article coming out next week, right? So it's being published on Tuesday. What's your article about? Just give us a little tease, and then obviously people can register to be signed up for the TakeStock newsletter as well. Tell us a little bit about your new one.
So it's just trading a small account, basically.
Trading a small account. Okay.
How to trade a small options account. So that's what it's about.
Okay, that's great. Because, I mean, I think that, you know, what a lot of people, you know, forget about is, you know, they think they have to have really big money, you know, in an account to actually be able to trade on here. I just got a little bit out of focus.
I mean, you need more than $500. You probably need a little coin in there. I mean, for sure. So
absolutely, we do need a little bit on there for sure. Absolutely, for sure. But again, I think that's a great topic, and I think maybe we should be looking at next week as well. I think you're probably going to be flying solo on the show next week, right? So you're going to be hosting on your own, and we've got a guest on the show, maybe.
We're going to bring on a guest. So we're going to bring on one of my buddies who I taught to trade like 4 or 5 years ago. He's had like $50,000-$60,000 trading months. Like he'll show. I mean, look, I don't know that he'll show up publicly. Maybe we'll bring him to the room, but he crushes at trading options. We're going to talk about his experience. We're going to go through the journey of trading. Just kind of have an open Q&A. Just kind of talk about trading.
That's very cool. I've actually been noticing, you know, people in the room here, you know, chatting in, Nick making comments, and Jim and some of the guys on here. Letitia. She's one of your students, I believe. She's saying nice shirt. She likes the shirt, Dan, which is awesome. I love that as well. And any of you guys, you can email us as well, support@stockability.com if you want to get some questions in. But yeah, we'll do a little bit of open Q&A on the comments next week with one of Dan's students too as well. I'll be chilling down on the beach next week with the family and everything, having a little bit of a downtime on that too. But yeah, if anybody does want to kind of find out more about what we do when we're not doing our radio show, Stockability, TakeStock Live is powered by stockability.com. at the end of the broadcast, what I'm going to do is I'm going to just put up a screen on here so you can actually see how you can go and register on our website and subscribe to our newsletter as well, and get out Dan's newsletter. And we will be back same time next week at noon Eastern, streaming on Facebook Live as well. Dan, have a great weekend. Thanks for joining us on the show. Everybody else, have a wonderful rest of your weekend, and we'll see you all next week.